You are watching another video from Invest Today, September 28th, 2024. And today's video, we're going to talk about the S&P 500. Let's just jump right into that Fear and Greed Index. Fear and Greed Index showing us we're down 3 points coming off that breakout and looking like the stock market is just only getting started and going to get greedier. We're nowhere near the extreme greed, so it looks good to still buy in that stock market, okay, and accumulate. Of course, days like September 6th and August 5th, August 7th with that carry yen trade deal and all that growth scare was a good time to purchase and a good time to accumulate. Okay, so now we're getting a little more greedier. So now is the time to kind of just hold, and all the way until we get to that extreme greed and then just start unloading a little bit there, a little bit of the profits because, well, we always correct. All right, so we're inside the S&P 500 charts here. We're looking at the 1 week chart. So this is quite the bigger picture, but it's better to look at this and see where we can get a sense of. Okay, so back all the way 1998, okay, there was a bit of a correction right here, the end of July 1998, and then bit of a correction. Then after the S&P 500, you can see this green line right here. That's the 100 moving average. Never even made it to the 200 moving average, okay, during the dot-com era here. Bouncing off, because I want you to pay attention here, bouncing off the 100 moving average, surging 68% for 77 weeks until the dot-com bust, okay? And little bit over here, it kind of came and double top there, hit a double top, and then definitely came down for 2.5 years, okay, with a 50% correction to the market of the S&P, okay? And then thereafter, V-shape recover, 107%. So if you bought the dip down here in 02, you would have done really well for 5 or 6 years. Okay, 5 or 6 years, and this here was a very bullish time. This was a time where the credit industry and stocks and kind of an everything bubble, everything, the economy was doing absolutely, it was surging. And then the bust happened in 2007, 2008, and the housing crisis busted. So there was a boom going on, 107% to the S&P, gained 816 points, losing 911 points on that. So it lost the entire gain since the end of 02 to the end of 07. Lost the entire gain in 1 year, 1.5 years on a down market. So this was a very, very bloody market, okay? And if you were buying the dip, it was looking like you were not getting anywhere buying this dip. You were continuing to lose until miraculously 2009 V-shaped recovery and bouncing ever since to the upside. So this one here with little minor corrections on the way. Now, if you do look here, this was under the 200 moving average, okay? So first time it dropped under the 200 moving average after the housing crisis got it under the 200 moving average, keep that in mind, plus the 365 moving average, which is a very, very, very bearish one to go under. So it made it under that V-shape recovery above all the moving averages, retesting, correction, and then just surging higher for 1, 2, 3 to 5 year surge right there. And then correcting for another year here, small correction, just coming right down to test that 200 moving average. Another 1, 2, 3.5 year pump to the upside for the S&P to correct down to the 200 moving average again, and then come up ultimately to COVID. And COVID took out the S&P in just 4 weeks, all the way down to that 365. But of course, the 365 was up so high, okay, at that time. The S&P really didn't correct all that much, did it? It only corrected 34%, $1,161 to the S&P. So many would think that it would have corrected a lot more. It did not, and lost out here. Essentially lost on the gains, okay? Could have had a great opportunity. If you didn't buy that dip, then you would have been out completely, okay? You would have been buying at higher prices. The S&P shows strength through its black swan events, okay? So that's the history we have with the S&P 500. It shows strength through all the black swan. So right now we have another, okay? So after COVID, V-shaped recovery, 121%, 2,642 points added to the S&P there to come up to an inflation crisis, recent inflation crisis, where the Fed had to raise interest rates. So it made the market very uncertain. So with the market being very uncertain, if the Fed's going to continue raising rates, are they going to cut, kept drawing the market downwards, but kind of on a sideways action here. Okay, so it did bring the market down only 27%, $1,306, which was the bottom. Okay, that was the bottom of the new bull trend. Okay, the bottom of the new starting of the new bull trend. Okay, so the bottom of the S&P 500 is currently $3,480. I want you to keep this in mind because every time the S&P comes down to the 200 moving average, it's very bullish. It's very bullish, and generally V-shape recovers and moves higher. Okay, so right now we couldn't be any more bullish. The Fed has now cut interest rates 50 basis points. All right, the elections are on the way, and the Fed looks like they're just going to keep cutting. So it looks like the market now has some legs and may take this very bullishly until we hit a recession and then end off into the bear market. But I think before that, we're going to have new all-time highs after new all-time highs, and it's going to take these risky assets and a lot of assets like into the NASDAQ and crypto to move higher, especially these technology assets and the S&P 500. Because the S&P 500, a lot of the retail likes to set their money in there, and so does corporations. All right. So the way I see, why I see my price target for $6,130, okay, I see it going right around there because simply I think we have just basically another V-shaped recover from the COVID highs. So I think that that's what's going to happen to this market today. So since it bounced from its 100 moving average right there and then followed through, just kept going. So here is the same, bounced off the 200 moving average here, came down, bouncing off its 100 moving average right here. Okay, that tells me if the market does the same recovery as COVID, it'll bring it right there to $6,130. Of course, COVID got there before then, so we're not there yet. The push up might be pretty quick, okay? But if we do take this from the recovering of the 100 moving average, so if we take it from there, so if it recovered from the 100 moving average, it would actually bring the price to $6,763. Okay, so that is a very good possibility as well. But I do think the market is going to take off and at least get to $6,130. So I do think that there's still another $500 in gain there. So there's a lot of room to grow. The market is nowhere near done. I do think we're going to get into extreme greed rather sooner than later, because the market is going to like elections and the rate cutting. I think the bullishness is coming. The FOMO is coming. 4-hour chart here. Okay, this gives us a little closer look to where we're at. So after hitting the all-time high of $5,766, the market retreated down a little bit, okay, and is coming down to its 21 moving average. But you can see that these are all lifting. They're all still lifting, and the 50-day moving average, the 50 moving average on the 4-hour is lifting as well. Once these lift, the market seems to like that and then move higher. Once these turn around, you can see right here, back in the history, 21 moving upwards. So it looks almost promising that the market is going to continue moving upwards here in the short term. It may correct here, okay? It may correct here and come down to $5,695, retest that. And it might even retest $5,665, coming all the way down to, if it does move below its 50, let's go to the 1 day here. If it does move below its 50 moving average, 50-day moving average, that's when things could get a little bearish. But if you look here, it's moved above the 50-day moving average and crushing it. Okay, so we got to keep that in mind, that it's not, doesn't look like it's coming back down. It looks like now it's moving upwards. All right, well, that's it for today about the S&P 500. Hope you enjoyed this video. Thank you for watching. Please do subscribe. See you on the next video.